Good morning. It's Sunday morning. The time is 8:14 a.m. Pacific Standard Time. Today's date is 3/27 of 2011. And we're gathered here today to look at the daily S&P 500. StockMarketFunding.com, our analysis on our homepage that will clearly state the February 18th and 19th is that we were talking about how the top would be, but to confirm it that we had to have a gap down, and we did. And we were long overdue, and we were so overbought and bloated on the indexes that there needed to be somewhat of a bear raid. And it all happened in the first quarterly trade of 2011. Because today's date is 3/27 and tomorrow is going to be Monday. It's going to be the end of the quarter. Not only that, are we going to see that big money flow come back in? Well, we're going to show you how to confirm it. And it will be as follows. So basically, when SMF MMTs were given the reversal over here, they understood what weakness was. Because as they were watching where various markets were going to be made, they knew that in their daily SMF platform, that weakness contraction was building. And it was. So in the first phase of reversals, we get this spike back up. It's called a retest to this major bar right here. But we could never, ever close above it. And they were here. You all remember. You all remember what we went through here. And you learned about the volatility. That price action volatility was heavy in the market. The perfect market that a market maker wants. And look at the gaps right back up here. But then immediately slide the bid. Immediately slide the bid. Then another little daily, the bulls were coming back in. They were fighting it. But guess what? You could never close back above half of that daily reversal bar in the SMF platform. And we knew that weakness was building, and it's always confirmed with the big down one. Same thing. They couldn't get back. And we finally had put in the bottom down here in our yearly mathematical formulas that we specialize in indexes, because we do. And every SMF MMT was given a very directive plan as to how to understand to short sell the market when the time was for a bear raid. You have to come down and create new buying opportunities. They have come back in. We've had one gap, two gaps, with the 3-day consolidation, with the fourth gap, the fifth gap. But most importantly is when this part of the reversal right here, this is going to be that major. And remember, MMTs, it's still a delta contraction. It's not the high delta up here. It's still going to be with the releveraging up in the trend. It's still going to qualify as a negative lower delta in the SMF market maker platform. So if we consolidate up here, we need to consolidate over here where these two bars are. If we consolidate there and or move higher, come back, fill in, and then break out and move higher and kind of come back and accumulate above the half bar, and we're looking for the S&P to have another, just like these big red bars were here, MMTs, like these, we need to see some big green bars trying to break higher. And at the end of the quarter, if the buyers are coming into the market, you're going to see that happen. So you got to have some big up bars just like you had on the sell short negative ratio. So basically going down, and now they've levered up on the S&P. To consolidate here, across here, this delta line is going to be half of this bar. That's 1322. Right now, the S&P is at 1313 because it closed at, guess what? 1313.8 right here. So this key bar is going to be the first challenge that this particular cycle is really going to have. It's going to be right into half of this because this is where the move started and this is where it ended. So basically, this half bar, 1322.11, and this is all just for tomorrow. And if we break up, there's a 1336 handle above it. And right over here, where we were making this daily 3-day top, there's a 1333.71 handle right there on that S&P. So you've got this one. You've got 1336.24 there. And if you really want to get down to it, 1341.10 would be that upper end. Okay. Now, as far as coming down to the support level, it's going to be 1304.97 right in here. This big red bar, meaning that if we drop down, we'd have to hold that. We can go, but see, it's going to be focused that we're this bigger part of that daily distribution in the S&P right here. That's a bigger daily distribution, is that this would end up being our price action support, and it would be verified in the SMF platform, and you would bounce off of there like a rocket, like Cape Canaveral taking off the launch, or a space shuttle, or whatever they do over there. So this area here is going to be 1304, and it is, and that's the shorter, that's the previous day. So we call this an inside daily price action bar. That's going to be, now if we do come back and test on the S&P, that means that the lower price action in the leadership in the S&P will come down. They too will hit support and bounce in price. And what we're going to be looking at is where the end of the first trading quarter, how the index plays out. We got a major unemployment report coming out. We're going to be starting April. It's traditionally the time that the bull likes to think, hey, spring rally. But there's going to have to be some numbers and some headlines that come out on the airways as MMTs. So look at, if we consolidate up here, this is going to be where we need to consolidate, right in here. I've given you the price action. Now, if we do go up and we pull back and we are consolidating up there, that means that the leadership names are going to be building their bases called price action baselines, okay, the SMF one now, before they break higher again, and they will. On the opposite side, if we come down and we start to fail this half bar and it becomes resistance, and we start working ourselves down here, and if we break any of these half bars over here, that's 1293.59 on the S&P. That's this one here, and let us not forget 1292.28. That's going to be half of this bar. So you can go up, you can come down, you can test and make higher highs. It just depends. If we see that money coming in, though, no, we're going to consolidate up here. That means that the market's going to be stronger. That means that when intraday pullbacks off of the highs happen in the leadership equities, they're going to bounce. And that's where you're going to get those flash trades, and you're going to want to put those trades on. You can do like several of them a day and make a lot of money. So right now, this was the bear raid, and this is the bull raid on the way up. The only thing that's lacking in here is we have to see some daily green bars, just like we did in the same price action. We need to see some of those going to the upside. And generally, if you consolidate up here, that's when those big bars will come in and confirm it. Otherwise, the upper resistance levels remain at a high premium risk because we have not had the same buy action, price action, daily bar price action in this whole cycle. We've had a couple of days here, but we don't have none of this on the way up. You got to see that in the releveraging in an index. And you got to see where that money is going to come in. All of these narrower range bars are not good. Like over here at tops, see the daily sell, buy, and see the daily distribution. Okay, and these are just gaps. This is where we had the high price action volatility. When we first started that gap, we had increased volatility, and I can prove it. I can prove it right here with the fear indicator, the VIX daily, which is correlated and directly related to S&P 500. And when we were breaking higher here, well, look what we were doing over here. We were breaking down, and you went through all of that. And that was the fear indicator. And right now, my MMTs, I'll be doing a separate one on the VIX for you today. But because we're back down here in the complacency zone where all of this havoc started, that means that there is less fear right now in the buy and sell transactions in the public tape, MMTs, as far as the relationship here with the S&P daily. Okay, so the longer that I stay down here, that means that we had this huge spike and all that fear. That was part of the reversal, as they always are. So if this is going to remain at low levels, then that means that that bull is coming in to buy on the fear indicator. That's the other half of this S&P now. So you can take a look here where the reversal, the gap downs, and you can see the gap ups. We had shallow gap up, delta gap up, delta gap up, delta gap up, and then the 3-day consolidation. But you can see here on the daily drop in the fear indicator in the VIX when what we were doing over here as far as the invert of each one of these. This goes down, that goes up in the S&P. So if we're going to consolidate lower up there, then that means we can consolidate higher up here in MMTs. That's the S&P 500 right now. I'm giving out the numbers to my MMTs and the SMF Worldwide Trader Network.